Hello viewers, we'll be going over gold miners, ETF ticker symbol GDX. In this video, we'll be going over the day-by-day probability model, how we find the models, and the forecast model for gold miners. So back to the technical analysis. Today we're down 1.3% on the 1 hour chart. We are approaching negative MACD, and we have not approached oversold RSI yet. And as for the 4 hour chart, we got off the overbought RSI. We start to see a divergence on the 4 hour MACD. And we are currently resting on the 18 moving average. If we expand out to the daily chart, if we expand out to the daily chart, we saw we made a nice reversal in the minor downtrend that we saw in previous weeks. So we broke off this down channel that was created that dated back all the way to January 3rd. We broke above that channel and now we create a new channel. So I do see a possible new support if we do reverse and head down lower. The support will be roughly around the 18-day moving average. Reason why we have a price concentration, so if we expand closer, this purple line is the 18-day moving average, and that coincides with past resistance. And since we're above resistance, that act as our support. So first we will see the 9-day moving average as another support level that also coincides with past resistance back in January 2nd and also in January 27th. So that is our first immediate support if we do manage to head down lower. And as for resistance, if we expand out, the resistance is going to be multi-year high, and we made resistance back in August 12th of 2016, and that is around price of $31.76. So we were around that level as well. So if we were to move down lower, that price movement is roughly around, I would say it is around 3.3% to the downside, and to the upside it is around 4.8% to the upside. So back to the day-by-day probability model, as the days progress to the 7th day, we see a slight favor to the upside. We have a 60% chance of gold miners climbing between 0 to 5% higher. And on the extreme case, we have a 10% chance for gold miners climbing between 5 to 11% higher. And on to the downside, we have a 20% chance for gold miners decreasing between 0 to negative 5%. And on the extreme case, gold miners falling between negative 5% to negative 11%. Again, this model is now available in the link below, so do check it out. So let's head back to the day-by-day forecast for gold miners. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to August 17, 2010 to November 10, 2010. So let me point out why these two charts are similar. So what we have here in the current trend, we average above the middle Bollinger Band, slightly coinciding with the middle Bollinger Band as well. And then we take a dip right here. And then afterwards, we see a nice reversal to touch the upper Bollinger Band right towards the very end. So we have those points there. In the trend in question, we also have similar pattern. We average above the middle Bollinger Band. Next, we proceeded to take a dip below the middle Bollinger Band, slightly touching the bottom Bollinger Band. And then we saw a reversal, and where we touch the upper Bollinger Band right towards the very end. So what we have is 1, 2, 3 points. We also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was August 17, 2010 to November 10th, 2010. Back then, gold miners was down roughly around 3.5%. So if we head back to the day-by-day probability model, it coincides with this standard deviation of 20% chance for gold miners falling between 0 to 5% chance. Again, this model is now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.